is the market structure? The market structure, in simple terms, is basically how the market works, right? And who is involved, right? The major players, the retail traders, and everything. How do these things work now? The market, since transactions are like basically done over the counter, as I mentioned in the previous video, right? There is no central exchange to practically trade on now, because all these transactions are over the counter. Execution price will always vary. Now, this is how the market works. Now, there are major participants and then there are minor participants, for the lack of a better word. And because I'm trying to make this as simple as possible so that you can understand without having to, rack your head a little too much. Okay, so as I was saying, our transactions are basically done over the counter, right? And there's no central exchange to trade on. So, however, there are major participants who like basically influence the prices that we get our foreign exchange for. Now, that being said, I would like to walk you through who these major participants are and how they work. Now, first off on the list is we have the central banks, and what they do is they basically influence the exchange rate, the monetary policies, the interest rates, and their job is basically to make financial policies that would help the currency, that would help their economy, and among many other things. But basically all that they do is to make financial policies, watch their economy, and put things in order. Anything monetary, they have to put it in order, right? And they are also responsible for the printing of every country's currency. Now, every country has its own central bank. In Nigeria, we have the Central Bank of Nigeria. In England, they have the Bank of England. In Australia, they have the Royal Bank of Australia. In the United States, they have the Federal Reserve, right? So every country basically has their own central bank that like controls or that influences their country's monetary policies and how much money is being printed, which eventually affects inflation and then the rest of that, and which also they have to monitor and make sure that it doesn't get out of hand. All right, so that being said, other than them, we have other players in the market, and since that the central bank is pretty much like the apex, individuals cannot just walk into the central bank and say, "Hey, I need a dollar." It doesn't work that way. Now, the central bank work in hand with other organizations like the FX dealers, which in turn would work with other large participants, like let's say companies, right? The mutual funds, the hedge funds, international companies that need foreign exchange for their international activities, right? And then we have the forex brokers, and then the retail ECNs, right? Now, these FX dealers, they work hand in hand with the central bank. Now, the forex dealers could actually be your local bank, right? Because they work directly with the bank. Now, these banks also, as you already know, they work with other large participants, which is every organization. No, sorry, which is large reputable firms like say Apple, Coca-Cola, Amazon. Obviously they have a lot of international transactions, so these people also like they work with the banks, not that they particularly influence the exchange value, but I'm just trying to make you understand how this money flows, like how the value flows around from the central bank to you and I, the retail traders, and then also the FX dealers, which I have already explained to, could be the bank, and other large financial institutions. They work with other hedge funds, mutual funds, and basically they work with big corporations that need foreign exchange every other day, right? Now, those in turn work with other forex brokers, right? We then provide for retail traders like you and I, and then the retail consumers as well. So that is basically how the market structure work in simple terms. So without further ado, I'll see you in the next video.